Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwagu. On the program today, Nigeria's Debt Management Office lists $300 million diaspora bond and €3 billion Euro bonds on the NSE and the FMDQ OTC markets today. And Tanzania lays ownership claim to Bharti Airtel's local unit. Plus, Chad and Glencore talks to renegotiate $1 billion oil-backed loan fail again. We'll start off the program with the markets on the African continent. Nigeria's stock market continued its downward trend today, sliding 0.33% at intraday. But South Africa and Egypt were up. The JSE index was up 0.92%, while Egypt was up 0.17%. Nairobi also closed down 0.10% on Wednesday. And in the Middle East, Qatar's stock market resumed a rally today, while most bourses in the Gulf were little changed, lacking fresh stimulus. The Qatari index, which has rebounded from near six-year lows in the past 10 days, added 1.19% at intraday as Vodafone Qatar, the most heavily traded stock, surged 4.4%. The index fell sharply in the months to mid-December after four other Arab states imposed an economic boycott on Doha. But signs that the damage is less than feared and a supportive 2018 state budget plan announced last week have helped the market recover. Saudi Arabia's index edged down 0.10%. It had risen in anticipation of this week's expansionary state budget for 2018, but has since then stalled with a fiscal blueprint largely priced in. In Dubai, the index edged down 0.14%, with the most active stock, Union Properties, gaining 2.9%, and Abu Dhabi was also down 0.23%. And to Europe now, markets were lower in early trade after the U.S. Congress approved an overhaul of the U.S. tax code that will cut corporate tax rates. Meanwhile, Spain's Catalan voters head to the polls in a too-close-to-call race. Annette Wisbert will tell us more. Good afternoon, Annette. You're back to the market, and I'm glad to see you. Annette, Catalonia goes to the polls today for a regional election following several months of political turbulence and uncertainty. Is this moving the market in any way today?
Well, actually, I have to say not really. The bond markets are fairly stable as well. Having said that, the bond yields were actually going up quite a bit in the last 2 or 3 days. With the U.S. tax bill adding some pressure here, because the anticipation is that the U.S. tax bill could actually spur inflation. So we have bond yields also in the Eurozone quite high already, but the markets are not very nervous about the vote in Catalonia. And the reason is for that even if the separatists would win that election in Catalonia, analysts are not expecting that they want an outright a secession from Spain, but what they want is just further autonomy, and that is not a big deal for Spain then going forward. A split from Spain would be bad, and it would be also a very bad message to other regions, or for other regions who actually also are kind of flirting with the idea of having more autonomy, such as Bavaria, but also parts of Italy. But, well, having said that, so for now the markets are not nervous, because even if the separatists would win the election, it's a very close call here. The general reading is, or general understanding is, that what they want is only more autonomy. They don't want an outright split from from Spain.
All right, Annette, let's leave politics and talk corporate news. Deutsche Bank. That bank has announced plans to cut up to 1,000 jobs. Why is Deutsche Bank doing this, and is it part of also what is driving the DAX that I'm seeing behind you right now?
Yeah, Deutsche Bank is actually going through a very difficult period. Ever since John Krein took over as CEO, he's trying to get Deutsche Bank back into shape, because Deutsche Bank is lagging behind on various measures. The cost-income ratio is far too high. They're spending too much money when it comes to their personnel, but also IT infrastructure is very old. So what we're hearing now is just part of the big restructuring efforts they're going through. So these 1,000 people made voluntary offers to leave the bank, and that is because they are also integrating too big of their retail businesses. Deutsche Postbank, which was a standalone business, now is going to be integrated into Deutsche Bank's retail business, and of course there are a lot of duplications there, and so these 1,000 jobs are about to go. But Deutsche Bank is offering those people severance packages, and that will cost them a lot of money. And one of the reasons behind Deutsche Bank today is among the biggest losers here on the market, and that is one of the big reasons behind that. Because, as I said, severance packages, making people leave, is very costly here in Germany, and that is weighing on the shares.
Right, in another corporate news, Finnish network equipment maker Nokia has signed a patent licensing deal with Chinese technology giant Huawei. What will this deal mean for these tech firms?
Well, Nokia actually has, as we say, at least in Europe, 7 lives apparently, like a cat, because it was long said to be a very dead company, but they kind of reinvented themselves with a business model to license their patents, which they have back from the time when they were really successful. And that deal which we are talking about today is just a further add-on deal to their very lucrative business they are already doing. So that licensing deal with the Chinese technology giant Huawei is estimated to add 100 million euros in revenues, according to analysts. And going forward, that's very positive news for Nokia, which is also reflecting the share price developments, because as a reaction, the shares are up by almost 3%.
All right, thank you very much for your time, Annette. I guess we have one more day to say Merry Christmas, so I hope to see you tomorrow.
Yeah.